Welcome to The Hustle with a special guest today. I'm your host, Ben Anderson, and we're talking to Brandon Abidin out of Louisiana, all the way out here to California, hanging out with me for the weekend and shooting some content, talking about the future of real estate and mortgage. So, this guy's a top producer. He's been on many lists. He's got a big name in his marketplace. And today we're going to really speak to the heart and mind of people in sales in industries where there could be a cycle. And so today it's how to win when there's a cycle. Because people will say, maybe there's a crash coming, maybe there's not a crash coming. There's definitely a cycle that happens almost every other year. So welcome, my friend, and how's your trip been so far?
You can't get any better. You're in beautiful Santa Barbara, California.
That's
now
right.
here in Montecito. I'm strongly considering moving out here in the next couple of years.
need to
It's
do it.
absolutely unbelievable.
And your flight was pretty basic from Louisiana. We had some good times hanging out at the resort and kind of getting our gym on and stuff. So,
Oh yeah. That's the best place to work out. Like I see why you have the membership there now.
it's awesome. Yeah, it's awesome.
To have that view to come out every morning after the gym and the beach and just it's like the perfect way to start your day.
It's good for the mindset. You were texting me, like having some time to think, get your mind right, really puts you in a spot where you can take advantage of this business cycle.
Yeah. Yeah, I'm big on my morning meditation, my morning routine, and just positive energy in the morning. Like I don't watch the news. That's probably a little advice I give anybody in sales, anybody listening out there. I don't watch the news in the morning. I stick to real positive things in the morning. And being at the Miramar Resort after the workout, your endorphins are going, and then just walking around, you could hear the waves crashing, and it was really truly just like a picturesque postcard. And then the sound, the smells, and everything. And so I was just kind of just being in the moment, which we don't get to do a lot in our business because we're always on a deadline. We're always moving at 90 miles an hour. We never get to just slow down and just be in the moment. And so it's just a really cool kind of euphoric time to just reflect. And being here talking to you and everything, it's been good. And then it re-energizes me too, because I look around and I see we do some big things for Louisiana, but then when you step up over here and you see Leonardo DiCaprio and guys like that just having breakfast while we're there, it's like there's bigger things out there. We could be doing so much more. And so it kind of opens your eyes to how much more you could be accomplishing if you just push a little harder. So it also motivates me.
It's exciting you're thinking that way. And I hope people listening to this podcast come out of this time together with just that feeling your energy, because this is a great time to have you do this podcast after we've been out there and you've seen some great sights and some great sounds. So you're the latest SVP of Guaranteed Rate, which is a giant move to a giant company, and you're probably their biggest recruit ever out of Louisiana.
Yeah.
How does that feel? How did that all happen? And tell us a little bit about your background in this business.
Yeah, so 20 years, actually 22, aging myself now. So it's been 22 years. I got in the subprime boom. Was the number one loan officer at 21 years old. I was then promoted youngest team leader. I was the number one team leader at 22 years old. And so I just really enjoyed the sales aspect. I enjoyed managing people. I enjoyed working with clients. And I just had a knack for it. And I excelled everywhere I went. And then about 15 years ago, I went independent. Opened my own brokerage, small, just independent for one or two man shop, and I did that for about a year or two, and then I started recruiting LOs, and we had the number one independently owned brokerage in Louisiana. We were doing close to 250 million a year the last couple of years, and last year Guaranteed Rate approached me, and at first I wasn't looking to make a move, but I always said my goal be disruptive enough that the big guys might notice and want to buy me out. And it was instead of a buyout, it was they acquired me as their area manager to grow the region in Louisiana and Mississippi and really expand and still keep my branch, my team. So their model was like a perfect mesh, because Victor's already built what I could dream of building out of a mortgage brokerage. Everything is laid out perfectly for a loan officer, anybody to grow, and the average LO there doubles their business the first year. And then you've got guys now that are in the top 2 and 3 in the country, 2 billion in production as individual LOs in a year. So I started looking at the numbers. Then I started looking at all the systems and things that were in place. And it was just something I couldn't do as an independent brokerage.
And it's because you told me that you saw a cycle coming.
I did.
And because of the cycle, you wanted to align yourself and position yourself differently. And you decided to make this move when it was probably more unpopular because the cycle hadn't really shown itself, but you've been around long enough to be able to smell the change in the air. So what did you see changing in order for you to say and talk to your wife and Jen and say, hey, let's make this move?
I don't do a lot of politics, but I will say the election. I didn't like the direction the country was moving toward business owners. You know, when your Speaker of the House and your President say capitalism doesn't work on national television, when we're a country built on capitalism, I'm a poor kid, minority that grew up with nothing and built $1 million company, multi-million-dollar company. You yourself, same thing. I mean, we're self-made. So to hear someone who's worth $100 million in this country say capitalism doesn't work started to resonate with me and made me a little fearful of being a small business owner. And I started looking at the companies like G-Rate and thinking, kind of like the too big to fail principle. These guys have all the tools, they have the financial resources, they can weather the storm. And I had made great money. I was the CEO of my company. I was very happy, but I was kind of at a point where I felt like the fishbowl effect. I wasn't growing anymore. I didn't have anybody to push me. I didn't have anybody to really mentor or teach me anything. I was always the one trying to do it, and that's when I started doing coaching with you, which helped me break out to that next level. Yep. And having you coaching me was a huge part of my success as well. So I'm going to give you some props.
Boom, boom. I'll take it.
And then I had a few other companies approach me, and they were good companies, but they were smaller. I would have been the top producer there. And I just looked at it like I'm a big fish in a small pond.
So for those that don't understand the difference, explain the broker model versus like the lender model to anybody who's wanting to understand or get into this business.
So if you're on either side and you don't know the other one, so I was a mortgage broker for the last 20 years. We had wholesale channels. We brokered our own loans. We had a dozen different carriers we would broker them out to. You'd get wholesale rates from, companies like United Wholesale is a big name in that industry. Homebridge Financial was one of my top lenders. So we would shop around for the lowest rate and look at different products. So we had a good array of products that we could offer our clients. So I always liked the flexibility and the ability to approve people who couldn't normally go to a bank or somewhere else.
So broker, a lot of options, but independent, not a lot of support, lower rates, but you got to cover all the costs yourself to run business.
Yeah, it was 100% on my back, everything, every cost, every expense, every condition clearing. I was always involved with every aspect of the loan.
Because that's interesting, because a lot of people might say, because prices are changing, I want to run into the broker model. But you're one of the few that ran out of the broker model because you've been around the cycles before to know you want to align with a company that's pretty strong.
Absolutely. I saw it as a perfect time because last year my stock was really high. We had back-to-back record years and the market hadn't shifted yet. But I knew with inflation, with the spending, everything that was happening, you and I talked about it. We knew it was coming. And it was an opportunity to take a good cash upfront offer and also go to a company where I had all the ability to grow more than I could have ever grown as an independent brokerage. The hiring now, the things I can do for loan officers here, I couldn't ever do as an independent brokerage. So I can bring in better talent. I can help them double, triple, quadruple their production in their first year or two. Things that were very difficult as a broker to do. Now I have all of those benefits to offer. I have all those different departments that we have, our business development, and we can talk more about that later. So many things that the loan officers could do at G-rate, and I saw it firsthand. I mean, it's impossible for an individual loan officer to do $1 billion and then $2 billion in production if he's involved in the day-to-day operations and clearing conditions. But they've got multiple loan officers who do $1 billion in production. For 10 years in a row, I looked at it, they were number one in the Scotsman's Guide for the most loan officers in the top 100, the top 300, and in the top 10, they had 3 people. So I started looking at that, and like my boss Pat always says, there's something in the water here. And I really looked at it. I went through 6 months. I flew up to Chicago, sat and met with Victor for about 30 minutes while I was there, went through a whole day of meeting with all their different heads of all their departments and touring the facility, finding out about their culture, getting to know Victor. And I just got that feeling that I align with his vision. I aligned with their values, their views. It was, like I said, if I could dream of building the perfect mortgage company, that's what I wanted my brokerage to one day be 10, 20 years from now. But it was already done and gift wrapped. I could just walk right in and take the reins and start going forward
so
with it.
what do you think this next cycle is about? And then my follow-up question to that is, what should independent people be considering because of this cycle?
This next cycle, clearly, refis are going to be stagnant because rates are already at 5%. Who'd have thought in the first quarter we'd have seen rates go from the 2s to the 4s and then to the 5s by the end of March? So we've seen a huge jump. Your average person in America had a 4% or better rate. So you're done with rate and term refinances. You're only looking at potentially some debt consolidation for the strong LOs who can sell it. Because if they got a 3% rate, your average LO out there doesn't know how to educate a client, look at a blended rate, things like we talk about, and really put together a detailed proposal with the right technology to demonstrate the savings if they were to take their mortgage rate up a half a point or a point by consolidating all their debt. So, this cycle is going to be purchase heavy. If you're not heavy purchase, you're going to feel and you're going to bleed out. You're going to definitely, and you're going to see, just like we saw, lucky for people in 2019 when the rates spiked up a little bit, 2018, 2019, it came back down quickly with COVID. But you saw Movement Mortgage in a matter of 45 days lay off 800 people back then. You saw Better.com has laid off a few thousand employees now, because they were refi heavy. They were all refi, low rate, low margins. And so, that was a thing too, that people would look at the rate as an eighth better as a broker. But when you're giving away loans and you're not making any margin, your profits are thin. And you don't have the ability to sustain a market shift. I mean, look at Better.com. They've laid off almost half their employees, and it's just the beginning of this cycle. So those companies that were running on those super thin margins are in panic mode now.
Do you think some companies are going to fail?
Always. The strong will survive and the weak will fail. It's nature. And again, if you don't adapt quickly to the market, you're going to die. Just like an animal in the wild, you have to adapt or you will die. So that's the cruel nature of business too. If you don't quickly adapt, and not even just adapt, but again, like we talked about, I saw this a year ago where people were wearing blinders. I saw this coming. If you don't look ahead and forecast well, then you're going to get caught like most people right now. They're caught with their pants down, not even expecting rates to have gone up this year. And it was obvious to anyone who was paying close enough attention to the markets.
I think it's a really clear picture of what's going on. And a lot of people, unfortunately, were newer that have gotten into the business and just felt like this is always going to be easy. And now they're feeling a little different way. And if you're newer and you're an LO and you don't have a lot of strong realtor relationships, it's hard just to get your foot in the door to get purchased. So talk to us now about how becoming a senior vice president of Guaranteed Rate was important. Like, what systems are
Yeah.
you able to offer, and why should people that are in that fearful mode consider partnering with a really strong big bank like yours?
That's a great question, actually. And I looked at it. We were a broker for 15 years. We were good, but we weren't great at start to finish super fast closings, which is imperative on the purchase side of things. And we oftentimes, if it was a hairy file, it had some issues, had some underwriting concerns, you're getting extensions. Realtors aren't always happy with that. I looked at Guaranteed Rate. The first thing, and you and I talked about it, they had the most efficient loan closing machine in the industry. They close loans faster, more effectively, more efficiently than any company out there. So that was the first thing that I looked at going into a purchase heavy market. We've got to be extremely efficient. We've got to have realtor satisfaction and client satisfaction. And they had the highest ratings and all that. They were the number one realtor recommended lender in America. They had almost 90% 5-star reviews, ratings on all the different ratings categories. So, every category they were the highest in the industry in the key things that are going to be important right now, which is speed to close, client satisfaction, realtor satisfaction, and repeat business in the purchase industry. The other thing I looked at, because like you were saying, I had a lot of new LOs that I hired. I trained them, and they were refi heavy. They didn't have realtor referrals. They didn't have a referral base. They relied on me to supply all their leads and marketing, which we did, but all throughout the last couple of years, I cautioned them to go get business, go get business, go get business. And like 90% of LOs out there, they didn't. And now they're in panic mode to bring in referrals and bring in business. They have an entire department at Guaranteed Rate called their business development team that does that for the loan officers. You can have a business development team do database mining. So if you've got a database, they will actually set up, mine your database, call. They will do realtor appointment setting. You can get their appointment setting to where they'll set you a minimum of 2 or 3 appointments a week with high producing realtors in your market. And then they'll also do follow-ups with all your past clients on closed loans. They'll mail postcards to your entire database, and they will go and they will put a whole team of marketing people underneath that LO to do what would cost me as a small office $500,000, because I'd have to hire a few marketing people, a few technology people, and I'd have to hire a few telemarketers to make all the calls.
What I call this is the triple S method, and it's what you need to succeed in any business. You need systems, which you just mentioned. The systems allow you to execute quickly, and then you have satisfaction.
Yes.
You need support, and support is going to generate you business, because if you're doing all the things that your support should do, then the third S is sales you aren't going to be able to do. So if you have systems, you have support, and you have sales, you will be able to weather any cycle, because now you as a salesperson can focus on getting business as your highest and best use. The problem that you're seeing as a small broker is, like you said, you don't have the systems
Right.
or the support, so then you can't sell.
No.
All three have to be there, and a place like G-Rate understands that, and they say, if you're a salesperson and we can have you go sell with the majority of your time, we'll cover the systems, we'll cover the support. It's a great combination, and that's how you get through a cycle.
100%. Like you said, the selling aspect. As a CEO of my company, I was the top loan officer, and I always joked, and you've heard me say it, I was the CEO and the janitor and everything in between, because I had to do marketing, I had to do payroll, I had to do accounting, I had to do management of the team, I had to do the sales trainings, I had to do every single aspect of the business, because I didn't have the second thing you mentioned, which was support, which was huge. I'm still in shock at just like the little things. I joke, like they sent me a keyboard and it was missing a key, and I emailed the girl at 4 p.m. on a Thursday. I said, hey, my keyboard's missing a key, just whenever you can. Friday morning when I got to work, and they're out of Chicago, I had a brand new wireless keyboard on my desk when I walked in from FedEx at 9 a.m. It was there.
Right. So think about it. They wouldn't have given it to you. The next morning, your keyboard's not working. You got to go run to Staples or Best Buy and grab one.
Yeah.
You're spending an hour and a half in line. Now you're back at your desk. Your whole day's disoriented. Versus keyboards here, I can go sell. Let me go get 3 more deals.
Right. And that's the level of service and speed that everyone there operates. Everyone there operates like you and I, which is a testament to the culture, because it's hard to get everyone performing at a high level of excellence and with speed and efficiency all the time. And that's what I've seen with every department since I've been there. The underwriting, the processing, the sales, the marketing team, the training. We have every week, Victor, the CEO, that's one of the things that's really cool too. I was involved because I was a CEO with 20 employees, and we all worked in one town and one office basically together. He's a CEO with 20,000 employees, but he is on Zoom calls with every one of us. We have meetings every week, 1 or 2 hours a week. He is personally hosting, updates, training, status, what the company's doing, what the weekly agenda is. So you have a clear vision of what is going on with the entire company, and everyone's bought in, and everybody's working together, and things move at just an amazing rate that I wasn't used to, because I was used to doing everything. And now I can be hyper focused on my loan officers' production, recruiting the best loan officers, and then helping the best loan officers become even better. Because just like I saw, I was doing 200 million, and I could double that. I could triple that. I could be the next Shant. Shant was doing 45, 50 million when he came to G-Rate. He's now doing over 2 billion in production. That's all his production. He has a great support team, obviously, but think of how you could ever do 2 billion if you're clearing conditions. And
never. It's impossible.
Exactly. And calling an underwriter to go through a file. You're not doing those things.
I guess what I'm hearing is, if you're running a smart business, there really isn't going to be a cycle, because you're focusing on making money and having an efficient process and the systems, the sale and support. So yeah. I totally understand why you made the change to run with a company that is, we quote unquote call too big to fail. Because you're not having to swallow that pill by yourself. You have support, and you're talented. So you can help other LOs make this transition and get them the support that they need. So
right.
Any early successes from people that have said, wow, I was doing it the broker way. I never thought I could make a move, but it wasn't so bad.
Good example. One of my loan officers, she is a marketing machine, but struggled with the paperwork and the details. She now has, in her first month, she's already topped her best month ever in her first full month. And now she has over 100 realtors in a realtor group that she's built through social media that are all sending her referrals. She's getting 5 to 10 applications on a daily basis.
Wow.
And this was a girl who was doing an average of 1 million a month in production at a brokerage, because she had to do too much. And I couldn't give her the support she needed. Now, I told her, we just put another loan officer underneath her, an experienced, seasoned loan officer who's an absolutely amazing loan officer, just not a rainmaker.
Right.
And then we put a sales assistant under her. And then she's got 2 processors, a front end and a back end processor. So all she has to do is get the deals in, and the team is going to run everything from there.
And talk about, because some LOs may be like, well, I'd love to get with a company like that's big and it's huge, but they think it's such a big headache to like move their business. How's the transition been for you? And then second follow-up question, if someone's looking to learn more about possibly transitioning, what do you guys do for them?
The transition was easy. If anyone had a hard transition, it was me because I was licensed in multiple states. I owned multiple offices. I had a dozen loan officers and probably 40 million in loans and processing in the pipeline. So there was a lot of logistics that I had to work through, and they have an entire transition team that they provide. So their transition team has in-house amazing loan officers that will take the files during your transition. They're going to basically originate them for you, walk you through the process, and assist you with your files during the transition. And they have the best processors on that transition team as well. Because one thing that they believe, and it's obvious to anyone who's been in business a while, is you don't want new on new, meaning a new loan officer with their new processors moving over to guaranteed rate and trying to learn a new process. So instead, when you're the loan officer and you come over, you bring your files that you're working, or you leave your files at your other company, because obviously you can't move them from one company to another for legal purposes. But when you've got new deals that you're working once you've started with us, at that point, you're going to work with a veteran processing team, a veteran LO, and they're going to coach you and walk you through the entire process. So all of the training and all of the assisting is done. Whereas, it always bogged me down when I hired new LOs as a small office, because I had to then take away half my time to train the new guys.
And then talk to us, last thing here, about how, because we've heard these rumors about when you come over, banks are going to write you a check. How does that work?
It's very true. Obviously they wrote me a nice check to make the move. And that was, of course, clearly a big part of the decision making was, it needs to make financial sense. And for loan officers, some of the checks we're writing, and I'm the one who has the checkbook, because that's part of my job as the area manager is recruiting. So, we have a proprietary software that it tells us everything you've done for the last several years in production, how many units you've closed, the volume, how many purchases, how many refis, what was FHA, VA, conventional, jumbo. It even outlines, where your percentages are of purchase and refi. And so all of that goes into that proprietary system, and then it's a formula, and it gives us a bonus number. So it'll pull up, I had $100 million producer. His bonus was over $1 million up front. So that guy, to make a move, he could get $1 million.
Here we are
front.
in 2022, and LOs are getting paid like athletes.
Yeah.
So
exactly, your first round draft picks, I call like the $100 million producers first round draft picks.
Right.
Those first round draft picks, you're talking 6 and 7 figure checks. Even an average producer, $20-30 million, those are 6 figure signing bonuses. And when you're looking at a year like this year, and the market's shifting, and you're taking a 30, 40, 50, some guys are taking a 60, 70, 80% hit to their business. Luckily we're still looking back 3, 6, 12 months at your production. But if people wait till 6, 12 months from now and their numbers are steady declining, those bonus numbers are going to drop. So now is really the time, if you're thinking about making a switch and you want to put that safety net, windfall of cash in the bank to weather the storm of 2022, that's also a great thing to look at, because then you can, again, when you're selling scared, you're not selling well. So if you put 100 or 200 or $1 million in the bank and you're covered and you're comfortable, now you can sell easier. Now you can go do the daily activities, you can go market, and you can perform doing the things you should be doing instead of worrying about where your next deal or your next check's going to come from.
So let's recap here. Top producer, ran your own business, killed it for years, veteran enough to know when you see a change coming, made a move to a big time player at the right time, got a great job, SVP, and now you're able to potentially help other LOs do the exact same thing. or if you're new in business, also it's a great place to get your business started with someone like you. So, I'm sure our audience is going to be kind of texting each other, say, hey, did you know you can go work for Brandon and he'll write his checkbook, he'll write you a big check. So good things to consider in this market when you want to protect yourself. What's the best way for folks to kind of follow you or get a hold of you?
So my Instagram, if you want to look me up, luxury lending. And then my cell number I give out to anybody that wants to reach out to me. My cell never stops ringing. You know how that is in this business, so got to be accessible. So 225-772-5843. Call or text. Text is always great because I won't miss it. And then, of course, you can look for me at Guaranteed Rate, brandon.abidin@rate.com.
And it's A-B.
Abidin. But the text is the best way to get me. Or shoot me a DM on Instagram. That's great. Or Facebook, if you're a Facebook person, Brandon Abidin.
Yeah, because the cool thing here is a lot of times, let's say that you're thinking about making a move to a big company. The first thing you do is you go on the website and you probably call customer service and say, can I talk to somebody? Well, here we are right now, and the person they'll refer you to is offering to talk to anybody about their business. So I think that's pretty cool.
Yeah.
So thanks for making time to kind of stop by Montecito. We got a good steak dinner last night at Lucky's. We got 2 workouts in, and you hit the beach up. So all in all, pretty good trip. What'd you say?
It doesn't get any better.
I don't think so.
I just wish I could have done longer. It's just I got to get back and get back to work.
Bring Jen and Ash, bring the kids out here. We'll have a good summer.
Yeah, absolutely.
All right. Well, great talking to you. Thanks for sharing and opening up. I never thought you'd go in that much detail, but you did. So you guys got the truth. You probably forgot the cameras were rolling and you just spilled the beans.
Well, my wife says I talk too much sometimes, so it's probably true.
Give this man a mic. That's how you do good stuff. Thank you guys for watching The Hustle. Check out Brandon and hit him up if you want more advice. See you guys soon.
Thank you, guys.